very quickly, introducing myself again, my name is Alessandra. I'm the Economic Empowerment Program Coordinator. And a few things that you might have seen already, but before we start, just want to get it over again. Make sure that you're muted upon entry. Click the Q&A to submit your questions at any time. And like the submitted questions to make sure that they are asked. Use the chat for comments and know that this webinar is being recorded. Now, the goals for today's workshop, you may have read them. It is learn about the most common financial institutions, banks, accounts, and resources such as debit cards and ATMs, and learn important financial terms and concepts. So this is what I want you to take away today. Now, what are financial institutions? These are simply companies that are in the business of providing you with services and products to help you manage your money, such as different types of accounts, loans, and investments, and among many other resources. So when you're a financial institution, and before we get into the specifics, these are the three things that I want you to have in mind. First, ask questions. Make sure the representatives are there to help you. You can ask your questions without fear and ask everything that you aren't sure about until you have all the answers that you need. Don't sign anything without understanding and ask for written information. Don't feel pressured to sign right then and there. Just ask for copies of any document that you need to sign, and you can take it home and look over them with calm and in your own time. Okay, so now why do we want to use a financial institution? So these are 4 points that I want to get across. First, security. Bank accounts are safe. Your money will be protected as opposed to carrying cash and being at risk of theft and fires. Plus, your money will be federally insured in case of if your bank or credit union closes, you will get your money back. Second is convenience. They offer easy access to your money and convenience in paying your bills, whether it's through check if you have a checking account or an online bill pay with a debit card. It is cheaper than buying a money order, and you'll have proof of bank statements that you paid your bills should any issues arise. 3, it's an easy way to save money. Many banks offer an interest rate when you put money in a savings account, and that will help your money grow over time. Additionally, if you have a checking and savings account in the same institution, you can have your money transferred periodically, and putting money aside automatically really helps your growth. And in the end, in the long run, using financial institutions to help manage your money will help you achieve the financial future that you're looking for. It will help save you money, however small it is, by using checks to pay your bills instead of going to a service that will charge you fees, or making transfers as well. And you also have easy access to your money through your bank's ATMs. Now, what are the types of financial institutions? So when we talk about, these are the most common ones, the ones that you're going to find on your day-to-day basis. First, let's start with the banks, which is the ones that we've all heard about. And these are for-profit private institutions that provide services to manage money, such as deposits, investments, loans. What you want to keep in mind is that when you open an account or conduct business at a bank, you are a client. Now, a credit union is a not-for-profit institution that provides services for money management as well. And many credit unions have in their mission statement to economically empower the communities they serve. So when you conduct business at a credit union, you are considered a member. And members all have something in common depending on the credit union. It could be that you work in the same industry or you live in the same neighborhood. There are many other things that you could have in common. And then the third one, the savings institutions, is these are banks that serve a local community. So these take the deposits of local residents and lend the money back in form of consumer loans, mortgages, and small business loans. And they're usually insured by the FDIC, which is the Federal Deposit Insurance Corporation. Now, going more into like what services you can access, what are the different accounts that you can get to, we're going to start with savings accounts. And these are accounts that you can open and you are going to set that money aside safely. Now, important to note that with savings accounts, the total, you can make deposits however many, you are saving your money aside. However, the amount of withdrawals that you can conduct within a month may be limited. It could be that your bank, 3 or 5 a month, that's the only time that you'll be able to withdraw before you incur a fee. Now, the money that you are depositing in a savings account will earn interest, and that percentage will depend on the financial institution and the account type. And we're going to talk a little bit about the most common types of savings accounts. But what you want, and I can't stress this enough, is that make sure that you get all the information from the bank or credit union that you choose so that you can make the best choice for yourself. Now, going to the most common types of savings accounts, we're going to go with starting with the regular savings account. And with this account, you're allowed to put money in, make deposits, or take money out, make a withdrawal. And to keep your account open, the bank may require you to keep a certain amount of money in the account at all times. This is what's called a minimum balance. As I mentioned, they will also limit the number of times you can withdraw money each month, and the bank will pay you a percentage of the balance of your account. This is what I was talking about at the interest rate. And that percentage depends on the bank. It can be paid every month or quarterly. So you want to make sure that you shop around before you commit to opening a savings account at any given bank. The second account that I want to touch upon is the money market account. And much like a regular savings account, a money market account also pays interest. It may require a higher minimum balance though, but it offers 2 extra advantages. First, you will receive checks that you can use to make withdrawals. There are still restrictions to the amount of times you can make a withdrawal every month, but being able to write a check is very convenient if you need to. And second, these accounts usually have a higher interest rate than regular savings accounts. And the third one that I'm going to talk to today is the certificate of deposit. Now, these require to keep your money in an account for a fixed period of time, from a few months up to 5 or more years. And this period of time is called the term. The interest you earn on certificate of deposits is generally higher than on a regular savings account or a money market account. And that is because the bank rewards you with a higher interest precisely because you are allowing them to use your money for a longer term. Now, if you withdraw your money before the end of that term, you may have to pay a penalty. So keep that in mind when you're trying to figure out what to open into your savings. Like, what is it that's going to benefit you the most? Whether it's just a regular savings account where you might not be able to earn a high interest rate, but you'll be able to access your money given, withdrawal limits, or are you certain that you're not going to be using this set amount of money and it might be more beneficial for you to put it as a certificate of deposit? Now, the other account that I want to talk to today are the checking accounts. And what are these? These are an excellent tool for managing your day-to-day money. These are the ones that you're going to use to keep track of all your expenses, your monthly expenses. You are going to be having a lot of advantages to it. So let's talk about these 3 things that you see on the screen. Safety. Again, it keeps your money safe. In the case of a mistake or a fraud, the bank insures your money. If you lose, a $20 bill cash, it's lost. In the bank, if anything happens, you'll be able to report it and the bank will work with you to make sure that your money is safe and you get your money back. Also, another advantage, you can use a service called direct deposit to send your income directly to your account and avoid paying fees at check cashing places. It's easy and convenient. You can deposit and withdraw your money easily. You can pay your bills. You can make purchases. You can avoid carrying large amounts of cash that presents a risk. And using your debit card, which comes with the account, it helps you keep track of your spending. The bank will provide a monthly statement, which is a history of all your transactions that month. And depending on the bank you have access, you may have a stack of free checks when you open the account. And once you run out, you can request more from the bank at a low cost. Now, speaking of checks, so let's talk a little bit about how to use them, why use them. So first of all, these are paper forms that people use to transfer money from one place of another. We might have seen one at any given point. But this, in its core, is a written order that instructs a bank to pay a specific amount of money from a specific account to a specific person or entity. So this is you giving your bank an order on how to manage your money. Now, how do you get checks? Like I mentioned, your financial institution will usually give you a stack once you open the account, and then if you run out, you can order more. And then why use them? In the same way, every time you write a check, you have a record of how much you spent and where, and they can help you keep a closer look to what you are buying, how much you are spending, and avoid spending more than what you planned. Now I'm going to go over the parts of a check. Now, this may seem something obvious, and maybe a lot of people might know, but it is really important to know what it is that you are signing or what it is that you're looking at when you receive a check. So I'm going to go over very quickly what are all the different parts in a check. So we're going to start, I'm going to put this here, a little mouse. Okay, so we're going to start here on the top left corner, which is where your personal information is. So William Fargo and address. So this provides details about the account owner. The payee line down here where it says pay to the order of, this designates who can receive the money. Only the person or organization listed here is allowed to deposit, cash, or endorse this check. The dollar box here next to the payee line is where you're going to display the value of the check in a numerical format, in numbers. And down here below the payee line is where you're going to write down the amount of your check written out using words instead of numbers. Now, this is important to note that you have to make sure to fill out both of these. Now, on this line, cents are written as fractions of a dollar rather than as full cents. And something that is very important to note is that if there are any differences in between the numerical numbers, the numerical format over here, and the written out amount, the bank will ignore the dollar box. And that is because words are harder to alter than numbers. So if somebody were to put a 1 here before the 4 and try to make this check out to $146.73, the bank would not cash that for that amount. Why? Because it is written down here that it is only for $46.73. Now below this, we see here the memo line, and this says for groceries. This is for your personal use. It's more about record keeping, and you should only be using this front box for any memos. Now the date line over here at the top, it serves as a timestamp for the check. The thing to note, if you want to delay the transaction, you can write a future date, and these are called post-dated checks. However, you can't simply post-date a check and expect the bank to delay the transaction. Banks have no obligation to adhere to the date written on the check unless you explicitly notify them that you want that check to be cashed at a later date. And the signature line down here verifies that the account owner has approved the payment. This is a security feature. Your signature is an authorization, and it can be compared to the account holder's signature on file. Now, signing should be the last step of writing a check, and it should be completed once you've double-checked that everything else is good to go. If you sign an otherwise blank check and lose track of it, whoever finds it can put whatever they want in those empty spaces. And it'll be harder for you to prove that you did not authorize that transaction when your signature is in that check. And then you might have your bank's contact information and logo is usually printed somewhere on the check. And then these two numbers down here that I really want to bring attention to are very important. So here on the lower left is your bank's American Bankers Association, or ABA, routing number. And this tells the banks where to find the funds for the check. And with that same number, other banks can get in touch with your bank and collect funds from your account when you write a check. The number that is next to it, that is your account number. And this is another identifier that lets the recipient know where the money from the check will come from. Now, a good way to find your account number is to look for this symbol right here, and your account number will usually appear just before that symbol. It might not always be right here at the center of the check, it might be somewhere else, but if you look for that symbol, you'll know that that is your account number. The check number, right here next to it, it is just another security measure to identify each payment and prevent fraud. There shouldn't be two checks with the same number under your name. Now, going to another resource that you have when you open an account is a debit card. And in the same way, I'm going to very briefly go through the parts of the debit card so you understand what each part is. So starting with the top is the bank branding. This identifies the institution that issued the card. They may display the name of a reward program or a retailer, but it'll usually be the name of the bank and a logo. And then you're going to be seeing the smart chips. And these are tiny metal processors that make your card more secure. And it makes it harder for thieves to get stolen credit card numbers. So if your card has one of these smart chips, you want to, whenever possible, insert your card when you're purchasing for things instead of swiping it in the card reader. Now, the card number is the most important part of the card. It identifies your account with the card issuer, and those are the digits you need to provide when making purchases online or over the phone. It is typically 16 digits. However, they can use as little as 14 or as many as 19 numbers. So you want to make sure that you keep it private. The expiration date right below it, that is precisely up until when you're going to be able to use your card. Your cards need to be replaced periodically, and keeping an eye out on the expiration is important, as you will need to provide it when shopping online or over the phone. Your bank will typically mail out new cards before the old ones expire, but you still want to keep an eye out where you have it saved so you'll be able to update it when the time comes. The cardholder name, it is the name of the person who is authorized to use the card. It can be the account owner, or it can be an authorized user that the owner added. But only people who are authorized to use the card can use the card. The payment network logo here on the lower right, it's pretty much essential to know what type of card you have, and because you're going to need it to make sure that you can use that card to pay for services or make purchases. And that logo helps you know which is what. And merchants often display stickers near registers telling you which cards they're going to accept. Some of the most common examples, you've probably seen them everywhere: MasterCard, Visa, Discover, Amex. And in the back of the card, we have the magnetic strip at the top. It contains the information about you and your card. When you swipe your card in a store, this is what provides the card reader with your payment details. However, these stripes do wear down and strong magnets can damage them, and you can order a replacement card from your bank if it stops working at any moment. The hologram right here beneath, some cards may have this area, right, this mirror-like hologram in that area. They're not always in the back. You might see them in the front too, but these are more security features that help identify valid cards. The signature box, so is this usually a white or a light gray box in the back? This is where you're going to sign your card. And the security code is another one that is really, really important aspect of using a debit card. And these are usually an additional code. It can be 3 to 4 digits, and it helps ensure that the card number has a legitimate original card. Online or phone payments typically require more than just the card number and the expiration date. And that, again, creates an additional hurdle to prevent fraud. And the security code can also be referred to as like a CVV or CID, CVC, but this is usually the number that they are referring to. You also see in the back your bank's contact information. For when you need to get in contact with your bank, this is the best way to make sure that you're talking to someone from your card issuer, especially if you receive a call or an email that you think might be a fraud or a con. You can just simply hang up and call your bank directly using the number in the back of your card and make sure that you are not, at risk of prey to a fraud. If you lose your card, do make sure that you contact your bank immediately. And the last part is down here, another logo, but this is the network logo. And these help you figure out which ATMs you can use. If you belong to a credit union, you may be able to use thousands of credit union branches all over the world. So going on into ATMs, what are they? Why use them? Is there a fee? And how do you use them? It's very simple. So ATMs stands for automatic teller machines, and these are specialized computers used by bank customers to manage their money. They allow you to withdraw money, they allow you to make deposits. At some, you can even print statements, check account balances, or transfer money. ATMs are operated by your own bank, will usually offer the most services. Why use them? Because they are also a safe and convenient way to manage your money. There are millions of these worldwide, and you can use them 24 hours a day, 7 days a week, with any language preference usually. Is there a fee? You have to check with your own bank. Almost all banks don't charge a fee to their own customers for using their ATMs, but they will charge a non-customer to use that ATM. And keep in mind that even though ATMs may cost a small fee, it is much less expensive than using a check cashing service. And now, how do you use it? Just to operate it, all you need is your ATM or debit card and your personal identification number or PIN. And this is a secret password that you create when you open your account. And something that I really want to stress today is that your PIN is personal and private, and you do not want to share it with anyone. Okay. Now, a few terms that I want you to make sure you go home with understanding is, first off, the overdraft. So you can see, if you pay, write a check, or use an ATM to withdraw more money than you have in your account, that is called an overdraft. And when you spend more money that you don't have, it is a serious issue. Now, two things can happen. The bank may decline your transactions. In the case of a check, the bank may charge you a fee, and the business who you wrote the check to may charge you as well. Now, if you make multiple overdrafts, there is a chance that the bank may close your account. However, and on the other side, if the bank approves a transaction and your bank account goes into a negative balance, they will typically charge you between $15 and $35 for each overdraft, and will continue to charge you that fee until that overdraft and any other late overdraft fees have been repaid. So for instance, if you had $20 in your account and you made a payment for $21, even though it is only $1 that you went into the negative over, you're still going to see probably a $35 overdraft fee, meaning that you're going to have to pay $36 for that one that you spent. And if you let it go, move over 2 days, then now you're owing $70 on top of the $1 overdraft. So you want to really keep an eye out on that. And to do that, you want to keep an eye out on your available balance. And this is your bank's most recent calculation of the amount in your account based on the transactions they have processed. So think of it as the funds that are available to withdraw or use right now. If you had to pay something with everything that's in your account, the available balance is that limit. Sometimes you're going to see an available balance that is less than your account balance. And this happens because the rest of the money is being held by your bank. So this happens for two reasons. One, you have made deposits that haven't cleared or credited to your account yet. So maybe you had a $100 balance and you deposited 50, but that 50 hasn't been cleared yet. Your available balance would be $100. You wouldn't be able to use the 150. And on the other hand, it could happen if there are pending withdrawals or authorizations against your account. So if you have $150 in your account and you made a payment for 50, you might see that your available balance is 100. So you want to, again, make sure that you keep an eye out for the money that you have available at that moment. And then another thing that you might have wondered about when I was talking about checks, so this is something that endorsing a check means signing the back of a check and telling the bank what to do with it. And there are several ways to endorse, and how you endorse it depends on what you want done with the money. Now, first, a word about safety and check fraud. You want to wait as long as possible to endorse that check. Endorse it at the bank before getting in line or right before you do a deposit on your mobile phone. If you lose the check after you endorse it, someone may take that check and alter it. You can write, for deposit only, or for deposit only to account so and so, or pay to the order of Maria Suarez. So that way, Maria Suarez is the only person that will be able to cash that check. And before I leave you, I just want to talk about a couple of good financial habits to keep in mind. One, as I mentioned, avoid spending more than you have. Review your statement every month. Make sure that all of the transactions that are in that statement are yours. If you see any irregularities, no matter how small they are, even if they're just a few cents or $1, report them to your bank. Now, you might wonder, how do I find credit unions? The big banks. So these are two resources that I want to leave you with so that you can find credit unions that are near you. Juntos Avanzamos is a coalition of credit unions that are committed to help the Hispanic community to use the resources that are available to them. And mycreditunion.gov is a government website where you can find a comprehensive list of all the credit unions that are near you. So these two are really good resources to find credit unions if that's something that you're looking for to open an account. Now, thank you so much for bearing with me until now, leaving you with this very, very important phrase, which is knowledge is power. We may have heard this many, many times, but staying informed is the best way to take control of your financial future. The more you learn, the less opportunities there are for missteps simply because you were not aware of what was available to you. So make sure to always stay informed, ask questions, and get the information that you need so that you can make the best decision that benefits you. I want to thank you all for being here today on the first of 4 of the Money Monday sessions. Next up is saving strategies. If you haven't signed up yet, please make sure you do. It will take place Monday, April 12th at 6 p.m., which be the English session. And again, you want to stay in the loop. If you want to know more about what we do here at the Hispanic Federation, our areas of focus are more than just economic empowerment. We do immigration, environment, civic engagement, health, and advocacy. Make sure that if you want to stay in the loop, go to HispanicFederation.org, sign up on that button that says Get Updates, or you can text the letters HF to the number that you see here, 40649. And right now, we're having a campaign to assist with health insurance. So if you are in need of health insurance and you have questions, or we'll help you through finding a good plan for you and getting you signed up. So if you want to call 1-833-656-2626 or email health@HispanicFederation.org. Thank you so much. And if you have any questions, please leave them in the chat and I will make sure to answer anything I can. Thank you. Now let's see the Q&A. Thank you, everyone. Looks like we are good to go. Thank you so much for joining us, and I hope to see you next week.